Hey everybody, what's going on? It's James here with Crypto Common Sense, and I've got your Bitcoin slash cryptocurrency update for November the 19th. So it's 7:30 a.m. Central Time, and I've been up for about 2 hours watching this thing and waiting for this thing to turn the corner, and it just hasn't done it. So I'm going to dive pretty deep into the big picture today, and also going to try to zoom in on the smaller time frames and give you at least some idea of what I'm thinking for the rest of this week. Before I jump into the content, please do me a huge favor. Go ahead and hit the thumbs up button on this video, and don't forget to subscribe to the channel if you haven't already. So first things first, I want to start kind of zoomed out and take a look at the weekly, because I think that a lot of people are delusional when it comes to Bitcoin. And I think that for a long time I was delusional when it came to Bitcoin. You know, even in 2018, when I was buying back in December, I was delusional, right? I just had it in my head that this thing had to go to a new all-time high, and that was the reason that I felt comfortable buying in December of 2018. Now, granted, that worked out. I made a lot of money off of those, trades, but reality is it was luck, right? Buying at those points on this idea that it had to go up was just dumb luck. And then even in, I started calling this bear market back in really in the later part of July. I didn't think it was a bear market before then. I thought it was a correction, right? I thought I think it was early July that I said it was going to probably bounce to 13.1 and then go down to the 61.8 fib. But I really expected it to, do this, and then this, right? And I mean quickly, like a normal correction, like over the course of 3 or 4 weeks. I did not expect this to turn into a bear market. But, later in July, I started thinking it was a bear market. And even then, I was looking at this and I was looking at these wicks. And I was really letting these wicks throw me off, right? I was counting this as a high, and this is a low, and this is a lower high, and this is a higher low, and this is a lower high. And reality is, guys, this picture has been so crystal clear. If you just start using line charts, if you forget the candlestick charts and you really want to get an idea of what in the heck is going on, just zoom out to the weekly, right? Bigger the time frame, the more powerful it is. Turn off the candles and just look at a line chart. And when you look at a line chart, this thing looks bad. Even worse than really, I would like to see. It looks terrible. First off, we have this, which I talked about in previous videos. This is a potential head and shoulders. The reason I say potential is it hasn't confirmed. It has to come down through this neckline to be a true head and shoulders. Now, there's other people that would say, no, it is confirmed because it's a sloping head and shoulders, which means this is the neckline. I don't know. I'm trying to give the benefit of the doubt. I'm not trying to be overly bearish. I'd like to see it break down below this level to call it head and shoulders, okay? But that head and shoulders, I find it very interesting. I think I talked about this in yesterday's video, so I don't want to talk about it too much. But I find it very interesting that when you measure the breakdown target for this thing, it sits down right at $4,100. Now, what is $4,100? Well, it's the neckline to our ascending triangle that we broke out of to start this entire rally, and it's also where that volume gap exists at, right? If we turn this back into a weekly candlestick chart, it's that huge volume gap. See that yellow line there? That's where I've had my bid sitting now since June for my spot fills where I'm buying Bitcoin to hold. That's where my bids have been for, almost 5 months now, okay, ever since I sold my Bitcoin. So I'm going to put that line back. That's one thing to really keep an eye on. That is, a potential. But the other thing is, and I hadn't really talked about this, right? When you really look at this thing, it's been crystal clear. Your high was not over here in June, right? On a line chart, your high was not in June. Your high was actually in August. So here was your high. Here was your first low, right? And what I mean by that, these weren't lower highs and lower lows. Look, higher high, higher low, higher high, higher low, higher high, higher low. Up until then, there was actually reason to at least reserve some hope for being bullish, right? Not a lot, because you had a double top right here, which is textbook, but it wasn't confirmed, right? until it breaks this neckline. It's not a confirmed double top. So, there was actually some reason to remain somewhat hopeful that this was going to, continue going up and that this was actually accumulation. But once we put in this right here was really the first lower high. And once we put in that was a sign things were going to get really bad. And that was a sign that really would have been a place to go short if you're looking at a line chart. And then we come down here and we have a lower low, which is textbook stuff, right? And then we come up here and we have a lower high, right? And again, if you look at this high, everybody was super excited because of the China news and all that kind of nonsense, right? They said there's no way this is based on technicals. You couldn't have predicted this. That's all nonsense. You guys have been watching the channel a while. You know that I did call for a pump October 23rd, right? 2 freaking days before the damn thing happened. There was triple bullish divergence on the daily. There was monthly support being pinged. There was a 61.8 Fibonacci level. I didn't know it at the time. I didn't notice it, but there was the 200 daily moving average being slammed into over here on the CME, right? There's all kinds of technicals that backed up that pump. What it didn't predict, I'm trying to find the chart I had open there. What it did not predict was the height of that pump, okay? And I had been saying that I thought it might go up and retest 9,500 again, but I had given up hope that it would get there because it took so long. Number one, I had given up hope, and number two, it didn't actually pump to 9,500. It had a wick that went all the way up to 10.5. That was very surprising, okay? But if you look at a line chart, if you just pay attention to where the week closed at, this was nothing more than a retest of this double top's neck. See this? Up, down, up, down. There's the neckline. Bam. I mean, it's textbook, right? If you were trading a weekly chart and you weren't being, confused by the hourly action, the 4-hour action, the daily action, and all that stuff, if you were just zoomed out and trading a weekly, look at this. Look at that. Right? You could have been short any one of these candles right on this yellow line. If you didn't get in on this one or this one, and I actually did short it there, but I closed it way too soon. Because I was, I don't want to say I was confused, but I was made anxious by all the chop that was happening on the smaller time frames. And really, I shouldn't have let that stuff bother me. I should have just stayed zoomed out because it was as textbook as you get. It came up. This is a bearish retest of that neckline, right? And then down we went. And if you shorted that neckline at 95.33 and you held that short, you'd be up over $1,500 per Bitcoin right now. It's a lot of money, right? That's a serious amount of money. And not only that, this thing looks really, really bad right now. We're going to talk about that more in just a second. So again, when you look at the line chart, it's all very, very crystal clear that we are definitely in a bear market, okay? This is nothing more than a downtrend. There's no other way to look at that, okay? So there's the bearish retest. So what comes next? Well, what does come next? If you got a lower high, a lower low, a lower high, you typically are going to make a lower low. Does it mean that it has to go straight down, that it can't have some kind of mini rally? No, of course not. I'm still in a long position, not feeling real good about it, but I am still in a long position from yesterday. I haven't been stopped out yet. So, it's going to be interesting to see where this thing goes. Really interesting. But overall, I'm not expecting this thing to do anything near what people are talking about. People are talking about it popping back up to 9,500. I don't think so. You usually don't get, a second opportunity to short like that. You're not going to normally get multiple retests on a weekly scale of a bearish retest. If it goes up to that level again, it's probably because it's going to turn bullish, right? So chances are, when you look at this weekly, it looks rough. Now, the other thing is I keep seeing people say, well, I'm going to go long at 6,000 because that's where the support is. I've seen a lot of people talking about this. And in fact, in past videos, I've even said, 6,000 might hold. But the more I look at this, what support are we talking about exactly? What support? Support at 6,000? There is no support at 6,000. There's nothing there. It's just dead air, right? It is friggin' dead air. What's happening is people are thinking, well, it was support back here in 2018. But the reality is year-old supports, year-and-a-half-old supports in some cases, right? They're not all that relevant right? I'm not saying they don't have any relevancy, but it's the same thing over here. When we were pumping, I remember everybody saying, "Oh, this is probably the top because we're gonna get rejected." It cut right through that like butter. So if it cut right through it like butter when it was resistance, what makes people think it's not going to cut right through it like butter when it's supposedly support, right? I don't think that's going to hold as support. We might get some type of relief bounce off of it, right? We might get some kind of dead cat bounce, but I would be very, very surprised if that holds as support. The general rule of thumb is once you start to fill in liquidity gaps, they don't stop until they're filled. And this whole thing right here was a liquidity gap, right? This whole area from here up to about here, it's all liquidity gap in there, and that's down around 5,800 bucks. Okay, so 5,800, maybe that would offer some type of support. I don't think so. I think the first level of actual support is going to be down here around this level right here, right around 51 to 5,200 bucks, because that was support / resistance in here. Okay, and if that holds, maybe we can bounce off of it, but I don't think it's going to hold, right? It's not that strong, and it's right above this liquidity gap and right above this neckline. I still feel very confident that we are, and let's be clear, I'm not guaranteeing this. I'm not saying that I won't change my mind at some point, but right now when I look at the charts, I still feel very confident that my bids down here are going to get filled, okay? And I'm not, 90% sure that it's not going to keep going down, right? This is starting to look more and more like 2014, where we had the false bottom, we had the dead cat rally, right? Granted, it wasn't near this big, but we had the rally, and then it ended up coming down and making a new low. Like this was like around 300 back then, and then it came down to about 150. So again, I'm still holding out the possibility that it does come in and fill in this old, it's not really a gap, but I'm still holding out the possibility it comes down and retests this old high from 2017, which, by the way, is right around the same area. It's just above the highs from 2013. Okay, so if we start getting underneath this area, all bets are off. We could see $1,000 Bitcoin, $1,500 Bitcoin, right, all over again. And if so, people on Twitter, when I talk about that, oh well, that means Bitcoin is dead, guys. That's total nonsense, right? $1,000 Bitcoin does not mean Bitcoin is dead. Right? I'm not saying that it's awesome. I'm not saying that you should be super excited about it, but it certainly doesn't mean Bitcoin is dead. Bitcoin will still function at $1,000 the same way it functions at $8,000. You'll just have less people speculating on it. Okay? Now, what I could see happening is if it goes down to that level, is I could see retail public losing interest in it. I could see the institutions coming in and buying it. Right? When you look at typical market cycles, institutions are first, and then the retail doesn't come in until it's like near the top. So I could definitely see institutional money accumulating Bitcoin down there, and then us starting a whole new market cycle where retail money thinks it's dead and institutions are quietly accumulating. Okay, and we could be looking at multiple years before we see anything exciting out of Bitcoin if that's the case. But that's one thing that I'm looking at. The weekly chart looks really, really bad, and sometimes it's important to zoom out and take a look at the bigger time frames, because it does really help to clear up the noise. When you look at that, it's almost impossible. No, it's not. It is impossible for me to be bullish when I look at this chart, okay, on anything more than a scalp, right? And again, I'm still in a long position. I'm still trying to play the dead cat bounce. Very dangerous, very risky fighting the trend like I'm doing. If I had it to do over again, I probably wouldn't have taken the trade, okay? I think, to be perfectly honest, I think it's more of a revenge trade. I wanted to trade this long position. I saw all these things, but I thought I'm not fighting the trend, and then I missed that pump. So it's like, I think in the back of my mind, I was like, I don't want to miss the next pump. But this isn't near as good of a position as this was, right? This had all kinds of reasons on the daily to take it. This had some reasons on the 4 hour, and they were quickly, demolished. To be totally frank, the divergences disappeared. Okay, so that's the weekly look. Let's get rid of those two charts. We don't need them anymore for this video. The 3-day, remember, I was pretty excited about this because it was a bullish retest. It slipped underneath this neckline. Now, here's the thing, though. It's a 3-day candle. It opened on the 18th. So it's still entirely possible that it will go back up and close on top of this. So just being underneath that temporarily doesn't really faze me, okay? I've got my stop losses on that long position. They're down at, they're pretty low. They're down around like 76.80 or something like that. Because if it gets down there, then I'm just not interested in longing it. I'll just sit out until it, figures out what it's going to do. And again, it's a fairly small position. It's only about, off the top of my head, it's about 10%, a little less than 10% of my portfolio, right? So if I do take, 5 or 6% loss, whatever that ends up being, it's like 0.5% of my entire portfolio. I'm not risking a lot on it because I am fighting the trend. So that's kind of the 3-day. Still looks very bearish, but I am still hoping for some type of bounce. Okay, so we'll get rid of that one. We don't need this one either. We'll get rid of that one. On the CME again, I think that this is kind of the last line in the sand. This 200 daily moving average. We're well underneath that on the daily, like on Coinbase or BitMEX, etc. But because the CME only trades Monday through Friday, or I guess it's technically Sunday through Friday. They close Friday evening my time and reopen Sunday evening my time. Okay, so because they're closed 2 days, their daily averages are different. So I could see this bouncing off of that. If it falls through that, I'm probably going to lose hope in my long position. So the altcoin picture, and I'm going to zoom back into Bitcoin, by the way, in just a second, guys, but I'm going to talk about altcoins. Again, I was talking about this yesterday. It looked really bad once it fell underneath this yellow line of support. That has flipped to resistance now. I do think that they're probably going to get some type of bounce, but I would expect them to get rejected at this line. So not holding out a whole lot of hope for altcoins. And just as an example, if we look at EOS, it's one of the coins that I've been watching, and it's textbook, guys. It is textbook. So I talked about this yesterday, how I was thinking about shorting it, but it was testing this neckline, and I just didn't want to short support. And I said that chances were it's probably going to come up and retest it. That's going to act as resistance, and that's basically what it's done. If you look at a 4-hour chart, now that's Bitfinex. I know it's done it because I was looking at it earlier in Coinbase. Here it is. Well, what the hell? That looks like I don't know what I'm talking about. Jeez Louise. Okay, well, it hasn't done it. For some reason, I was thinking it had. I think I had the line drawn right here, maybe. I don't know. Anyway, I expect this to act as resistance now. It was all through here to support. Now we're underneath it. So if EOS does come back up to that 325 level, I think it's just going to act as resistance. Not going to get super excited about that. But again, I'm not going to be shorting a coin that is severely, severely oversold. That's just it. Like sometimes people will see this stuff on RSI and they're like, oh, it's oversold, so I'm going to buy it. It's not really a buy signal. Okay, being oversold is not like, okay, I should buy that coin. For me, being oversold is more of a, okay, I don't want to short it. Okay, because there's just not that much potential in my eyes. Now it could totally dump, right? But for the most part, I'll be sitting out on alts until they put in some kind of bullish structure. I haven't looked at Litecoin today. I haven't looked at it since it was $56 yesterday. Same thing. It's underneath the 200 moving average on the 4-hour. On the daily, it's fallen underneath this, so now that's going to act as resistance. In fact, you can see it already did, right? It came underneath it here, came up resistance. So if you were shorting Litecoin, this might have been a place to go short on a bearish retest, and boom, down, right? And if you had shorted there at $59, this looks like a small drop because of the scale of the chart, but that's not. That was a big drop, right? If you had shorted on that line of resistance, right now you'd be up about 8%. Huge, huge trade, right? 8% in one day. So overall, I'm going to be avoiding alts for a while. But let's talk about the zoomed in picture for Bitcoin, because again, I am in a long position on a shorter time frame here. So what I want to do is look at the 4-hour, and this 4-hour, I'm still thinking that there's some bullish bounce left in this thing. Okay, when I look at this, it's basically it's found support right around this $8,000 area, right around that ballpark there. So if it falls underneath that, it's going to have this big liquidity gap. I think it'll go down quick, all the way down to 7,500. But if you look at what it's doing, like especially if we zoom into the hourly, it's got this big tail, then it came down and put in another tail, and it's formed this kind of lower low pattern. At the same time, it's putting in higher lows on RSI. So this is actually a bullish divergence on the hourly chart while sitting on top of support, okay, which is important because if you look at what Bitcoin likes to do in those cases, just as an example, here's another example of this, right? Came down, put in that bullish divergence. This wasn't even bullish divergence, but the same pattern has been playing out over and over, right? This downward sloping lows with the tails. And then you get these periods of consolidation and then these pumps, right? If you go back, it's been doing this over and over. It did it again back here, right? Downward sloping tails, consolidation, and then a pump. Right here, right? Downward sloping tails, consolidation, and a pump. Over and over and over this year, Bitcoin's done this. Downward sloping tails, consolidation, kind of a pump, but not much of one, right? That was more of a dead cat bounce, like a little fake out there. But anyway, that pattern has had a fairly high success rate of consolidating and then having some type of pump. So that's one of the reasons that I'm still on my long, and that's the reason that I haven't jumped out of it. I am short-term bullish, right? I do expect that this thing needs some type of relief bounce. All right, whether it gets it, I don't know. I really don't know. It looks bad. You know, you get your 4-hour RSI sitting down here at 18, which is terrible, right? And if you look, and we take a look at that 18, and we draw a horizontal line, that was about the point that it got to over here on this drop before it had the big move up. But back here, 18 meant nothing, right? It just sliced right through it. So I'm not super confident. That's the reason the position is small, guys. It's a very small position, right? I mean, it's not small in terms of US dollars, but it's small in terms of percentage of my portfolio. I don't feel real confident about it. So we'll see. We'll see what happens with the long. So this video started out fairly on point. I felt like I was doing a good job, but I kind of feel like I'm rambling at the end here. So I'm going to go ahead and wrap it up, guys. Please remember, I am literally some guy sitting in a spare bedroom. So nothing in this video is financial advice or trading advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up, and don't forget to subscribe to the channel. And if you haven't already, you can check the description for links where you can follow me on TradingView, Twitter, and also where you can join my absolutely free Facebook group. This is James with Crypto Common Sense. Trade safe.